Have you ever wondered why some traders consistently make fortunes while others, despite their sophisticated strategies and advanced degrees, repeatedly lose their shirts in the market? What if I told you that the secret to successful trading isn't found in complex algorithms or expensive trading systems, but in a handful of simple rules that have stood the test of time for over a century? But before we begin, please hit the like button and let me know where in the world you're watching from. Today, it's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Jesse Livermore, perhaps the greatest trader who ever lived, discovered something profound about the markets that most investors still haven't grasped today. He realized that big profits don't come from complicated formulas or intricate systems. They come from following straightforward rules with unwavering discipline. Has this ever happened to you? You've analyzed a stock thoroughly, researched the company's fundamentals, studied the technical patterns, and convinced yourself it's the perfect trade, only to watch in horror as it moves against you immediately after you buy. Livermore would say you're looking in all the wrong places for answers. The market itself gives you all the signals you need, if you have the patience to listen. While most traders frantically search for tips from brokers, friends, or financial news, the real wisdom is hiding in plain sight in the behavior of the stocks themselves. Livermore observed that stocks tell you their intentions through their actions, how they respond to good news, bad news, and market pressure. Stay with me until the end, because what you're about to discover might completely transform how you approach trading and investing. When a stock refuses to drop on bad news or fails to rise on good news, that's the market whispering its secrets directly to you. These subtle clues are worth more than all the hot tips and expert recommendations combined. What made Livermore different wasn't his intelligence or access to information. It was his ability to see what was actually happening rather than what he thought should happen. He understood that men often ruin themselves by trying to outsmart the market when all they really need to do is obey it. The elegance of Livermore's approach lies in its simplicity, but don't be fooled. Simple doesn't mean easy. In fact, most traders find it incredibly difficult to follow simple rules consistently because doing so places all responsibility squarely on their shoulders. There's nowhere to hide when the market clearly tells you what to do and you choose to ignore it. As we dive deeper into Livermore's trading wisdom, you'll discover why the most successful traders in history didn't need complicated systems or advanced mathematics to amass their fortunes. They simply needed the discipline to follow a few fundamental rules that the market itself reveals. If you're serious about developing the discipline that separates market winners from losers, hit subscribe now. I share timeless trading wisdom that you won't find in typical technical analysis videos. The revelation at the heart of Livermore's approach is what he called following the line of least resistance. This principle sounds deceptively simple. A stock that's going up will continue going up until it proves otherwise, and a stock that's going down will continue going down until it proves otherwise. That's it. No complex algorithms, no advanced mathematics, no insider information needed. But this simplicity creates a profound mindset shift for anyone who truly embraces it. Most of us have been conditioned to believe that success in the markets must be complicated, that we need sophisticated tools, advanced degrees, or secret knowledge to succeed. Yet here was Livermore, one of history's greatest traders, telling us that the hidden truth was sitting right in front of our eyes all along. Why do we resist such elegant simplicity? The answer reveals something fascinating about human nature and our relationship with decision-making. When we adopt complex systems, we create a psychological buffer between ourselves and our results. If the trade fails, we can blame the system, the indicators, or some external factor we couldn't have foreseen. My moving average convergence-divergence indicator didn't accurately predict this reversal, we tell ourselves, hiding behind technical jargon. But when you follow Livermore's simple rule, respecting the prevailing trend until it clearly changes, there's nowhere to hide. The responsibility sits squarely on your shoulders. If the stock is clearly rising and you sell too early, you can't blame anyone but yourself. If it's clearly falling and you refuse to cut your losses, the failure is yours alone. This journey into self-responsibility represents one of the most transformative aspects of Livermore's approach. The market becomes a mirror reflecting our own psychology, our fears, our greed, our inability to admit when we're wrong. Most traders find this revelation so uncomfortable that they immediately retreat to the safety of complexity. Consider how often we've all made excuses for poor decisions. The broker gave me bad information. That unexpected news report changed everything. The market is being manipulated. These narratives protect our ego but prevent the very growth that would make us better traders. The most profound impact of Livermore's philosophy isn't just on trading results, it's on personal development. When you accept that the market is telling you everything you need to know through price action, you develop a different relationship with reality itself. You learn to see what is actually happening rather than what you hope or fear might happen. Behind the scenes of every great trader's success story is this fundamental acceptance of simplicity and responsibility. The market doesn't care about your theories, your hopes, or your elaborate justifications. It simply moves, and your only job is to move with it or get out of the way. Now, I want to go even deeper into this topic and explore how Livermore's approach to discipline separated him from other traders of his era, and why emotional control matters more than intelligence in the markets. If this perspective on trading psychology resonates with you, write "Simplicity is power" in the comments below. What truly separated Livermore from his contemporaries wasn't some brilliant analytical mind or special market insight. It was his extraordinary discipline. This revelation challenges our fundamental assumptions about success in the financial markets. We often imagine that the most successful traders are the ones with the sharpest intellects or the most sophisticated analysis, but Livermore's journey tells a different story. Anyone can buy or sell a stock, he would say, but how many can sit tight while their profits grow? How many can resist the urge to snatch at small gains or to hold on too long when the market has turned? This emotional resilience, this ability to follow your own rules when every nerve in your body is screaming at you to do otherwise, is what separates the amateur from the professional, the gambler from the speculator. Consider this paradox. The hardest action in trading is often no action at all. The patience to let your winners run, to sit quietly while others panic, to maintain your conviction when doubts creep in. These are the true tests of a trader's character. This mindset transformation doesn't happen overnight. It's a gradual awakening to the truth that your greatest adversary in the market isn't other traders or even market makers, it's yourself. Livermore illustrated this principle with his legendary Union Pacific trade. While others were scrambling to take quick profits as the stock climbed from 162 to 172 and then to 182, Livermore held firm. "A profit isn't a profit until you take it," his friends insisted, embodying the fearful mindset that prevents most traders from ever capturing significant gains. But Livermore wasn't guided by fear or conventional wisdom. He was guided by his rule: never sell a stock that is acting right. Union Pacific continued to display strength, refusing to falter even as it climbed higher. The market was signaling its intention through price action, and Livermore simply listened. His patience and discipline were eventually rewarded with nearly $1 million in profit, a fortune in his day. This revelation about the importance of letting winners run challenges one of the most common trading mantras. No one ever went broke taking a profit. While technically true, this wisdom is often the road to mediocrity. By cutting winners short while letting losers run, the opposite of what we should do, traders ensure they'll never capture the life-changing moves that create real wealth. The psychological barrier we face is that holding winning positions becomes increasingly difficult as profits grow. Each uptick brings more anxiety, more fear of losing what we've gained. What if it reverses? What if this is the top? These thoughts plague even experienced traders, driving them to prematurely exit positions that still have substantial room to run. Subscribe to Join our community of disciplined traders who understand that market success isn't about prediction. It's about following proven rules with unwavering consistency. Livermore's approach offers a pathway beyond this limitation, a clear, objective standard for when to hold and when to fold, not based on fear, not based on greed, but based on the behavior of the stock itself. This removes the emotional guesswork that derails most trading journeys and replaces it with a reliable compass. But implementing this wisdom requires something few are willing to give: the surrender of the ego. To follow Livermore's rule means accepting that you don't know where the stock will ultimately go. You're simply observing its behavior and respecting what it tells you. If you've ever struggled with selling winners too soon, type "let them run" in the comments below. This brings us to one of Livermore's most challenging revelations. The market doesn't exist to validate your opinions or theories. It doesn't care about your carefully constructed logic, your economic forecasts, or your technical analysis. The market simply does what it wants and reveals its intentions through price action alone. This truth can be deeply unsettling for those of us who pride ourselves on our analytical abilities. Think about it. How many times have you watched a stock continue climbing despite being obviously overvalued, or seen a company with perfect fundamentals languish at depressed prices? These moments aren't anomalies. They're windows into the market's true nature. The market operates on its own logic, one that often defies our human expectations and rational frameworks. What's fascinating about this journey is how traders respond to this cognitive dissonance. Rather than adjusting their perspective to align with reality, most invent elaborate justifications. The stock is oversold, they insist, as it continues dropping. It's gone up too far, they declare as it keeps climbing. These narratives serve one primary purpose: protecting the ego from the painful admission that we might be wrong. This brings us to the transformative power of humility in trading. Livermore observed that big profits only come when you're humble enough to admit that you don't know anything and the market knows everything. This mindset shift represents one of the most profound psychological barriers traders must overcome. Behind the scenes of nearly every blown account and trading disaster is the same fatal flaw: a trader who believed they knew better than the market itself. They refused to accept what price action was clearly showing them because it contradicted their deeply held beliefs or carefully constructed theories. Their stubborn pride cost them everything, when simple humility would have preserved their capital. The revelation here isn't that analysis is worthless. It's that no analysis, however brilliant, should override what the market is actually doing. When theory and reality conflict, reality always wins. This wisdom extends far beyond trading into every aspect of life where we might let our preconceptions blind us to what's actually happening. Consider how this principle might transform your approach. Instead of trying to predict what the market should do based on your analysis, you simply observe what it is doing. You surrender the need to be right and embrace the freedom of simply following. This doesn't mean abandoning thought. It means recognizing the limitations of thought when confronted with the wisdom of the market. Livermore watched countless intelligent, educated men destroy their fortunes because they couldn't make this simple adjustment. They'd fight the trend, double down on losing positions, and invent increasingly complex justifications for why the market was wrong. And they were right. All the while, the market continued its relentless movement, indifferent to their protestations. The hidden truth here is that trading success requires a rare form of intellectual humility, the ability to hold your views lightly and let them go instantly when the market suggests otherwise. This flexibility, this willingness to dance with the market rather than fight it, separates the survivors from the casualties. If you recognize this battle between ego and market reality in your own trading journey, comment "Humility wins" below. Now, let's explore what may be Livermore's most crucial teaching, one that separates the professionals from the amateurs, the survivors from the casualties. While most trading educators focus on how to find winning trades, Livermore understood that handling losses properly is the true cornerstone of trading success. Losses are part of the game, he would say. You can't avoid them. What you can avoid is letting a small loss grow into a big one. This perspective represents a profound mindset shift for most traders. We tend to view losses as failures, as evidence of our inadequacy or lack of skill, but Livermore saw them simply as a cost of doing business, the inevitable price of admission to the market's opportunities. What's truly remarkable about this insight is how it reframes our entire relationship with being wrong. In Livermore's world, losing money isn't the real danger, losing your nerve is. When you can't execute your trading plan because you're paralyzed by the fear of another loss, that's when your trading journey is truly in peril. The transformation happens when you realize that taking small losses promptly isn't a sign of weakness. It's the ultimate display of strength and professional judgment. It requires the courage to face reality without flinching, to acknowledge a mistake without self-recrimination, and to preserve capital for the battles that matter. Behind the scenes of nearly every trading disaster is the same psychological pattern. A small loss that could have been contained is instead allowed to grow into an account-destroying catastrophe. Why? Because the trader couldn't bear to admit they were wrong. Their ego simply wouldn't permit it. This reveals something fascinating about human psychology. Most of us would rather suffer enormous financial pain than experience the momentary discomfort of admitting a mistake. We'd rather watch a position deteriorate day after day, hoping for a miraculous recovery, than simply cut our losses and move on. The market, however, is utterly indifferent to our emotional needs. It will happily wipe out anyone who refuses to accept reality. The revelation here isn't just about trading. It's about how our egos can sabotage us in every area of life. That stubborn voice inside that says, "I can't be wrong," or "just a little longer and I'll be proven right," is often the very thing standing between us and success. Livermore recognized this trap and built his entire approach around avoiding it. This is why stop losses aren't just technical tools, they're psychological shields that protect us from our own worst tendencies. They remove the emotion from the decision and enforce the discipline we might otherwise lack. When properly implemented, they ensure that no single mistake can derail our entire journey. The path to mastery involves embracing a paradox. The best traders aren't those who are right most often, but those who handle being wrong most effectively. They cut their losses quickly, preserve their capital and mental energy, and remain poised to capture the next opportunity when it appears. If you've ever struggled to cut a losing trade, type "protect capital" first in the comments below. When we distill Livermore's wisdom to its essence, we arrive at what he called the simple arithmetic of speculation. This formula isn't complex mathematical wizardry. It's a straightforward equation that anyone can understand. cut your losses short so bad trades don't hurt you, and let your winners run so good trades more than compensate for those losses. The beauty of this approach lies in its mathematical inevitability. If your losses are always small, but your winners are allowed to grow large, the final result takes care of itself. You don't need to be right all the time, or even most of the time. You simply need to ensure that when you are right, it counts for much more than when you're wrong. This revelation transforms the entire trading journey. Most traders obsess over win rate, the percentage of trades that are profitable. They chase the illusion of a perfect system that's right 80% or 90% of the time. But Livermore understood the hidden truth. Win rate is far less important than the relationship between the size of your winners and the size of your losers. A trader who wins on 70% of trades but takes big losses when wrong will eventually go broke. Meanwhile, a trader who wins on only 30% of trades but keeps losses tiny while letting winners soar can amass a fortune. This isn't opinion. It's mathematical certainty. Yet, how many traders structure their approach around this fundamental reality? The decision to embrace this mindset requires surrendering the ego's need for constant validation. You must accept being wrong often while trusting that your discipline will ensure those wrong turns don't derail your journey. This perspective shift doesn't happen overnight, but when it clicks, trading becomes less about prediction and more about probability management. This brings us to Livermore's equally profound insight about patience. You don't need to catch every move, he would say. You only need the big ones, the real swings. That's where the fortunes are made. This runs counter to the frenetic activity we often associate with trading. The hardest work in this profession isn't analyzing charts or researching companies. It's doing nothing when there's nothing worth doing. Consider the revolutionary impact of this principle. Most traders crave constant action. They believe more trades equal more profit. They feel unproductive, even anxious, during periods of inactivity. But Livermore recognized that the market pays for being right, not for being busy. Quality of opportunity trumps quantity of trades every time. Behind the scenes of most blown accounts is a trader who couldn't resist the urge to always be in the market, who felt compelled to trade even when no clear opportunity presented itself. They forced trades out of boredom or impatience, treating the market like a casino that must be constantly fed. The true professionals, by contrast, can sit for days, weeks, even months waiting for the perfect setup. They understand that capital preservation during quiet periods is just as important as capital deployment during active ones. They recognize that patience isn't passive, it's an active discipline that requires tremendous self-control and confidence. If you've ever found yourself overtrading out of boredom or FOMO, type "patience pays" in the comments section. Let's explore a profound paradox at the heart of Livermore's approach, one that challenges our deepest psychological need for certainty. The market never offers guarantees. It doesn't provide absolute assurances or perfect signals. It deals only in hints, signs, and tendencies. This revelation can be deeply unsettling for traders who crave certainty before committing their capital. The transformation happens when you accept that waiting for certainty is waiting for an opportunity to pass. By the time a move becomes obvious to everyone, the easy money has already been made. This requires a fundamental mindset shift, learning to act decisively on probability rather than demanding certainty. Think about what happens psychologically when you face this decision point. Your analytical mind wants more data, more confirmation, more proof before acting. It feels safer, more responsible. But Livermore understood the hidden truth. This quest for certainty is often just fear, disguised as prudence. The professional trader must develop the courage to act on incomplete information, trusting that their risk management will protect them if they're wrong. This doesn't mean throwing caution to the wind. It means developing a relationship with uncertainty, learning to dance with it rather than being paralyzed by it. Your rules aren't there to predict the future with perfect accuracy. They're there to give you an edge, a probability advantage that plays out over many trades. The individual outcome matters less than the process followed. Behind the scenes of every great trader's journey is this pivotal realization: trusting your system even when your nerves are screaming against it. The courage to follow your rules when they conflict with your emotions separates the professionals from the perpetual amateurs. It's not about eliminating fear, it's about acting despite it. This connects directly to Livermore's observation that prices act before news. In every market cycle, the same pattern holds true. The tape is ahead of the crowd. Price movements occur before the fundamental reasons become publicly known. By the time the explanation appears in the headlines, the move is often largely complete. Consider the revolutionary impact of this insight. Most traders wait for confirmation. They want the story, the narrative, the reason why a stock should move. They wait for earnings reports, analyst upgrades, or news stories to validate their decisions. But Livermore recognized that by then, it's too late. The market has already discounted that information through the behavior of informed participants. The trader who watches price action and obeys these signals makes money. The trader who waits for explanations or perfect clarity is always a step behind. This isn't mysticism, it's the natural result of how information flows through markets. Those closest to the information act first, creating subtle price patterns visible to the observant trader long before the news becomes public. Knowledge. This principle challenges our natural desire for narrative and explanation. We want to know why before we act. But the most successful traders reverse this order. They act on what the market is doing and let the why reveal itself later. They trust the wisdom embedded in price action more than they trust narratives or explanations. If you've ever noticed a stock moving significantly before important news was announced, type "the tape knows first" in the comments. A profound insight emerges when we truly internalize Livermore's wisdom about market signals. The problem has never been that these signals aren't present or clear enough. It's that most of us simply refuse to believe what we see. This revelation cuts to the heart of why trading success remains elusive for so many, despite having access to the same information as professionals. The uncomfortable truth is that we often don't want to see reality as it is. We want the market to conform to our opinions, to validate our hopes, to fulfill our desires. When it stubbornly refuses to do so, which it inevitably will, we have a choice: adapt our thinking to align with reality, or ignore reality to preserve our existing beliefs. Most choose the latter, often unconsciously. This pattern of selective perception isn't unique to trading. It's a fundamental aspect of human psychology that affects every area of our lives. We see what we want to see, filter out contradictory information, and construct narratives that protect our egos and existing worldviews. In the market, however, this tendency isn't just unhelpful, it's financially devastating. Consider how this dynamic plays out in real time. A trader develops a bullish thesis on a stock, carefully researching fundamentals and identifying technical patterns that support their view. They enter the position with confidence, but then the stock begins behaving poorly, failing to advance on good news, breaking support levels, showing relative weakness. These are clear signals that something is wrong with the original thesis. Yet how often does the trader acknowledge these warning signs? More commonly, they're dismissed, rationalized away, or simply not seen at all because they contradict what the trader wants to believe. The awakening happens when you realize that the market is constantly speaking to you through price action. Every tick, every volume spike, every failed rally or successful test of support contains information, if you're willing to receive it, without distortion. This receptivity, this willingness to see what is rather than what should be, represents one of the most powerful transformations a trader can undergo. This journey of perception brings us to Livermore's final and perhaps most profound insight. Discipline is worth more than cleverness in the market. Wall Street is littered with the blown accounts of brilliant individuals, PhDs, mathematical geniuses, renowned analysts who couldn't master themselves. Their intelligence became a liability when it convinced them they could outsmart the market rather than respect it. The market doesn't reward education, background, or argumentative skill. It doesn't care about your degrees or your elegant theories. It rewards only one thing: obedience to its laws. And staying obedient requires discipline, the mental fortitude to follow your rules precisely when everything inside you wants to break them. This discipline manifests in countless small decisions. Cutting a loss when your rule says to cut, even though you feel the stock will bounce. Sitting tight in a winning position, even as fear urges you to take profits. Staying out of the market during unclear periods, even as boredom pushes you to trade. Each of these moments is a battlefield where discipline either prevails or falters. If you recognize how your own perceptions and biases have affected your trading decisions, comment "I choose to see clearly" below. As we've journeyed through Livermore's timeless wisdom, I hope you've discovered something beyond just trading strategies, perhaps a mirror reflecting your own relationship with the market, with uncertainty, with success and failure. The principles we've explored transcend trading and speak to fundamental truths about human psychology and our relationship with reality itself. What made Livermore extraordinary wasn't some magical ability to predict the future. It was his rare combination of self-awareness, discipline, and humility, qualities we can all cultivate regardless of our experience level or account size. His journey reminds us that the greatest battles in trading aren't fought on charts or in markets, but within ourselves. If you found value in these insights and want to continue exploring the psychological dimensions of trading mastery, subscribe to join our community of thoughtful traders seeking deeper understanding. I create videos that go beyond surface-level tactics to explore the mindsets and principles that drive consistent success. I'd love to hear which of these principles resonated most strongly with you. If you've made it to the end of this exploration, drop a comment saying "Market Wisdom Accepted," so I know we're on this journey together. If you found this perspective helpful, a simple like helps others discover these ideas too. Not for algorithm points, but because these timeless principles deserve wider understanding in a world obsessed with shortcuts and get-rich-quick schemes. There's a video right here that explores how to implement these psychological principles into practical trading rules. Click and continue with me over there as we translate these insights into actionable strategies that respect Livermore's timeless wisdom while adapting to today's markets.